Hello, my name is Evan, and welcome to Evanomics 101, your number one source for everything economics. What if I told you that the stock market hasn't actually outperformed the way you think it has? Most investors measure success in dollars, and we can see that the stock market indexes have either exceeded all-time highs or they're approaching all-time highs. But if you measure success in dollars, what if the dollar is losing value? In today's video, we're going to break down three major economic ideas on gold versus the dollar, and those economic ideas, or the things we're going to talk about, are why gold may be outperforming the stock market indexes when measured properly, 2, how monetary policy and inflation distort asset prices, and 3, why gold and crypto play completely different roles in the financial system. Thank you for tuning in. Please like, share, and subscribe. And by the end of the video, I would like my viewers to understand why gold tells a completely different story about real wealth compared to the stock market. Okay? So let's go ahead and get into the video. Most people look at stock market and see massive gains over the past 20, 30 years. You can look back, see how well the stock market has performed. And when you look at it that way in dollar terms, that's true, okay? But here's the key question. What happens if we measure stocks in gold instead of dollars, right? Okay. So when priced in ounces of gold rather than US dollars, major stock indexes haven't grown nearly as drastically as you think. In some long-term comparisons, equities are actually flat or even down relative to gold. So what did all that mean? What does all of this mean, right? I got a quick example I want to show you. So where you have $1 equals 1 share of stock in 10 years, then 1 share of stock equals $2. But because our currency is being devalued, that $2 only gives us $1.50 worth of buying power, meaning our profit going from $1 to $2 is $1. But the real profit going from $1 to $1.50 worth of buying power is only 50 cents. Okay? Do the same example in gold. $1 equals 1 bar of gold. In 10 years, that 1 gold bar equals $2. Gold doesn't lose its value. So the profit going from $1 to $2 is $1. My real profit stays the same, $1. Okay? This basically suggests that part of stock market's rise may be due to currency depreciation, not just real economic growth. Okay, if the measuring stick is the dollar, and the dollar is shrinking in purchasing power, we know this. Asset prices can rise even if real value hasn't increased at the same proportion. So if you're able to understand this, it kind of changes the game on everything. It changes the narrative completely, okay? We're going to go more into this. We're going to go more into inflation, the devaluation of currency in later videos. But for now, we're going to move on to the second topic, which is the illusion of growth. So let's talk about what's behind all of this. It's monetary policy, right? You've heard the term, but we want to break it down so that everybody understands exactly what is monetary policy, right? So, simply put, it's the action by the central banks to manage. They have 2 to 3 functions or goals: manage economic growth, stabilize prices, promote maximum employment. Right? I want to break it down even further than that to simplify it. Monetary policy is basically the Federal Reserve controlling money supply and interest rates. These 2 things right here are very important, and we're going to talk about those in later videos. But for now, over the past few years, past few decades, central banks have lowered interest rates, they've expanded the money supply, injected liquidity into financial markets, and when more money enters into the system, more money goes into the system, it doesn't impact everything equally, okay? Financial assets, stocks, real estate, bonds, crypto rise first, and a lot of times they rise the fastest. This creates what looks like a wealth creation. It looks like we're doing good. Things are booming. But that's an economic illusion. Okay? Is the market really rising because of productivity and innovation are exploding? Or is it really rising because the currency is losing purchasing power? Inflation doesn't raise grocery prices, it inflates asset prices. Inflates asset prices. Real estate, stocks, bonds, crypto go up. It's going to be more on inflation. We're going to do a deep dive to help understand what actually is inflation. But for now, all of this proves that gold is just a true hedge for monetary expansion. That's basically it. The next thing we're going to go into is comparison over gold versus crypto. So we're just going to make a modern comparison real quick, so you can basically understand the two assets serve two different purposes. Okay, so gold has for thousands of years, it has a history over thousands of years. You can use gold in electronics. Its value isn't dependent on a single government or an algorithm compared to cryptocurrency on the other hand. So crypto, we know, is digital, is highly volatile. When we talked about crypto, you can see that Bitcoin was over 100,000 a couple months ago. Now it's at 65,000. So it's highly volatile. And I'm not going to go into I will go into cryptocurrency a little bit in later videos. But crypto is driven primarily by investor demand, speculation. For me, and this is just my opinion, it's gambling. You're trading. You're not investing when you go into crypto. And if that's what you do, that's not to insult you or to insult crypto in any way, but it's more so a speculation. All right? Gold is viewed as a defensive asset, all right? Crypto is often viewed as a risk asset. In periods of uncertainty, inflation fear, investors tend to rotate their assets where they believe they're going to be able to preserve purchasing power. That's what's meant by gold being a hedge, being able to preserve its purchasing power against inflation. And historically, gold has done its job. So the bigger economic picture, this debate isn't about gold versus stocks. It's about what is real wealth. How should we measure returns? And what happens when currency itself changes in value, right? If asset prices are rising, your house, your stocks, your bonds are rising primarily because of monetary expansion, then nominal gains don't tell the whole story. We need the real gains. So that's the big picture, okay? We're gonna recap real quick and then that's gonna be the end of the video. Again, I have a lot more on monetary policy, inflation, stocks, golds, bonds, economic policy. So to recap real quick, gold can outperform stocks when you measure returns in real purchasing power terms, okay? Central bank policy inflates asset prices, which can distort how we interpret market growth, how well the market is doing, right? Gold and crypto both serve a purpose, but they're fundamentally different, right? Whether you agree or you disagree, understanding these dynamics makes you a smarter investor. That's basically what it is, okay? And more informed participants a more informed participant in today's economy. So if you want more breakdowns on inflation, asset bubbles, monetary policy, real wealth, please subscribe, share, like. Thank you again for tuning in. I'm sorry I'm not going to do a whole lot of editing on this video or any of my videos, but Thank you again for tuning in.